Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Sunday, April 26th, 2026. Today's signal of the day is AMC, a small cap equity trading around $1.64. Now, before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and commentary, not investment advice. I'm not your financial advisor, so please do your own research before putting money anywhere. Now, Sundays on this channel are different. Monday through Friday, I bring you the alpha, the convergence, the names BuzzPulse surfaced overnight. But Sundays when we slow down, Sundays when we open the hood, and today I want to walk you through three things: the current signal of the day, how BuzzPulse actually scores an asset in plain English, and the most loaded economic week we've had in months, because what's coming Tuesday through Friday is going to move every position that you hold. Now, let's start with AMC. The signal locked at $1.64 this morning. AMC passed 7 independent quality gates. BuzzSurge fired a Z-score of 4.1 with confirmed momentum. Short interest sits at 15% afloat. Options flow is confirming directional positioning rather than hedging, and the system flagged a buzz price divergence worth your attention. When 7 independent signals align on the same asset on the same day, that is convergence, and convergence is the highest confidence setup BuzzPulse generates. Here's what's actually happening underneath the data. Social attention on AMC is spiking, but price action has stayed subdued. That gap between what the crowd is saying and what the tape is doing create the divergence, and divergence is historically resolved one of two ways. Either the stock catches up to the attention or the attention evaporates. With 15% short interest sitting in the flow, you have pre-built upward pressure if this thing breaks. Implied volatility rank is at 42%, which means options premium is mid-range, not cheap, not expensive. And when the unusual options activity confirms institutions are taking a side rather than buying protection. This is a bullish convergence signal at 164, but the setup demands follow through. If you see volume expansion and price breaking above recent resistance in the next two sessions, the divergence is resolving upward, and that 15% short interest becomes fuel. If attention fades without price response, walk away. 7 layers of convergence earn airtime. They don't guarantee outcomes. Now let's open up the hood. I want to spend a few minutes today walking you through how BuzzPulse actually scores something, because the numbers I throw at you every morning don't mean much if you don't know what they represent. Now, start with the Z-score. When I say AMC printed a Z-score of 4.1 this morning, what that actually measures is how unusual today's social attention is compared to AMC's own history. The system pulls 30 days of conversation volume on every ticker it tracks, calculates the average and the standard deviation, and then asks one question: where does today fall on that curve? A Z-score of 0 is normal. A Z-score of 2 means today is 2 standard deviations above the average, which already puts you in the top 2.5% of historical activity. A Z-score of 4 is explosive. A Z-score of 10 is a rocket ship. The reason this matters is that raw mention counts lie. A stock with 1 million followers will always have more conversation than a stock with 10,000 followers. The Z-score normalizes that. It tells you whether the asset is loud relative to itself, not relative to everything else. That is what makes it a tradable signal instead of just noise. Next, the buzz score. The Z-score tells you the asset is unusually loud. The buzz score tells you whether anyone agrees on what's being said. The system runs every social post, every news item, every Reddit Instagram, or YouTube comment through an LLM, which classifies sentiment on a scale from negative to +1. And then it weights those readings by source credibility and recency and produces a single conviction read. Sentiment at plus 0.5 is strong bullish conviction. Sentiment at 0 is the crowd talking past each other, which usually means noise. Negative sentiment with a high Z-score is what we call a pump and dump fingerprint, loud but ugly. The system flags those, and we cut those from the show. Then there's Convergence Depth. This is the one you hear me talk about every day. Convergence counts how many independent signal layers fire on the same asset. The Z-score is one layer. Momentum confirmation is another. Sentiment is a third. Options flow, short interest, implied volatility rank, buzz price divergence, news catalyst, sector confirmation, technical positioning. There are 18 possible layers in total. Signal of the day requires a minimum convergence depth of 7. Why 7? Because 3 or 4 signals lining up could be coincidence. 7 independent signals lining up on the same name on the same day is statistically rare, and statistically rare is where alpha lives. The last metric I'll mention today is the greed score. Gordon Gekko. The greed score is the system's alpha potential ranking. It looks at the convergence depth, the type of catalysts, the sentiment quality, and the directional setup, and produces a number between 0 and 1. Above 0.4 is high greed, which means the crowd is positioned aggressively. Below 0.1 is low greed, which often means the asset is on a watch list rather than a trade. AMC's greed score this morning is on the elevated side, consistent with the 7-gate convergence read. That's how the sausage gets made. Z-score finds the noise, BuzzScore checks the conviction, convergence depth confirms the signal is real. Greed score tells you how aggressive the crowd is. 4 numbers, that's the framework for BuzzPulse. So one macro item worth flagging from Friday. The Justice Department dropped its criminal probe of Federal Reserve Chairman Jerome Powell. That removes a significant source of regulatory uncertainty heading into Wednesday's FOMC meeting and clears the path for Kevin Warsh's nomination process. Sentiment around the announcement read positive at plus 0.32 with a Z-score of 14.7, which tells you that the market is reading this as a real change in headline risk around monetary policy leadership. Watch how this flows through rate-sensitive sectors and financials this week. Now, let me talk about why this week is the most important week we've had since the start of the year. Tuesday morning, we get the Conference Board Consumer Confidence reading for April. After 2 months of declining consumer sentiment driven by oil prices and geopolitical noise, this print will tell us whether the consumer is still hanging in or starting to pull back. Tuesday after the close, Microsoft reports earnings, then Qualcomm. Microsoft is the second largest company in the S&P 500 by weight, and Qualcomm anchors the semiconductor and mobile chip narrative. Whatever Microsoft says about cloud growth and AI capital spending will move the entire mega cap tech complex on Wednesday's open. Wednesday at 2 p.m. Eastern is the FOMC rate decision. Consensus is the Fed leaves rates unchanged at 3.5 to 3.75%. The Fed has been in wait and see mode for months, and Powell's press conference at 2:30 will matter more than the decision itself. Watch for any shift in language around the timing of a possible rate cut, particularly given the recent move in oil and the Strait of Hormuz situation. If Powell stays hawkish, expect a flight to quality, and if Powell signals a cut is coming sooner than expected, expect risk assets to dip. Wednesday after the close brings the heaviest single earnings night of the quarter. Alphabet Amazon, and Apple all report on the same evening. Amazon's cloud and retail commentary will set the tone for the consumer. Alphabet's ad and search numbers will tell you whether AI is actually driving revenue yet. And Apple's services revenue and iPhone guidance will move every supplier in the chain. This is the night that defines the back half of the earnings seasons. Thursday morning is the Q1 GDP advance estimate, the first official read of how the U.S. economy actually performed in the first quarter of 2026. After two messy job reports and an oil shock, this number sets expectations for whether the second quarter is recovery or recession watch. Friday morning is the ISM manufacturing for April. Manufacturing has been contracting most of the year, and the question for Friday is whether the sector is stabilizing or accelerating its decline. One important calendar note, the April non-farm payrolls report is not this Friday. The Bureau of Labor Statistics has officially scheduled that release for Friday, May 8th. So this week's macro risk peaks on the FOMC decision Wednesday and the GDP print Thursday, with mega cap earnings cushioning either side. A quick word on the broader tape. The VIX is at 18.7, up 7% over the last 5 days. Volatility is elevated but not panicked. Bitcoin dominance is at 58.2%, slightly higher in the last 24 hours, which means capital rotation into altcoins has paused for now. One last thing, if you're watching the mega cap earnings parade this week, remember that Microsoft, Amazon, Alphabet, and Apple do not get signal of the day coverage on this channel because they're large cap names everybody already knows about. The value proposition here is discovery. The assets you didn't know were moving, the setups you wouldn't have found on your own. That is what earns airtime on Invest AI Savvy. Remember, BuzzPulse tells you what the market is talking about and whether that attention is unusual. It doesn't tell you whether to buy or sell anything. That's your call. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.